Hello everyone, you are watching a trading algorithm. I am Vlad. In this video I will show you indicators that will help you to analyze the market structure. They are designed to simplify the process of analyzing the price structure and identifying trend and flat phases. However, these indicators should be used in conjunction with your own understanding of market processes, so watch the previous videos on placing orders and price structure analysis. You will find the links in the video description. Now let's move on to the indicators that have been developed to simplify the process of price structure analysis and the identification of trend and flat phases. Let's start with the full version of the high-low disbalance indicator. This is a multi-purpose, multifunctional indicator that contains many different patterns, so it will be seen in other videos as it performs other tasks as well. The high and low identification system allows you not only to find extremes, but also to filter out strong extremes and weak ones. The settings of the indicators are described in a separate video. In the trend finding mode, the indicator displays green and red dynamic support and resistance levels. If you see only the red line or only the green line, you get signs of a stable trend. Dynamic levels also serve as real levels that can be tested and the price can bounce back. If you see both lines at the same time, it means that the market is showing signs of a leveling off. It can also be a correction of a longer pullback, but at this point you need to understand that there is no phase of a stable trend in the market. Accordingly, the exit from such a range should be seen as an attempt to resume the previous trend or to turn into a new trend. There are two ways to determine the moment of the transition to the flat. The first way is to find such signs by visual analysis of the chart. The second way is to use the trend finder mode of the high-low imbalance indicator. On the lower chart, starting from the red vertical line, we have received information that there are signs of a flat. Starting from the orange line we get the same signs in the visual analysis. In other words, in this example, we learned about the signs of consolidation earlier from the high-low imbalance. However, it is best to combine both methods because the indicator is not always ahead of the visual analysis and the visual analysis can be an additional confirmation of the formation of a flat. The most important thing is that we have learned in time that trend models may not work at that moment. This means that both trend strategies and indicators will cease to be profitable. Therefore, if there are signs of a flat formation, you should stop active trading or change your trading strategy from trend to flat. Let's return to the previous example where we analyzed the upward momentum from the volume. The visual analysis did not confirm the flat at point 3, but we can see signs of a local flat on the high-low imbalance indicator. After the bearish move, we still have the red moving average line and the seller supports a new bearish momentum. After the downward momentum, a local consolidation is formed, followed by an upward trend breakout, a flat test, and a new upward momentum. This suggests that you can find local consolidations without any confirmation on visual analysis. This allows you to create independent trading strategies. The levels of the trend finding mode in the high-low indicator can also be used to build breakout strategies. The indicator is set in such a way that it stops plotting when there are signs of a real breakout of a level. This moment can be used to start trading the trend until its trendline breaks or a new flat appears. And if the indicator receives signs of a false breakout, the level will continue to rise until new breakout signs are received. Identifying possible false breakouts is very important when trading a trend in order to avoid false signals of a trend reversal. As I mentioned before, the indicator has a system for identifying extremes. It also has an additional filter. By increasing the filters to identify the strongest extremes, we cut off relatively weak extremes and get the strongest levels. It means that we leave the levels in the waves where there was increased interest in trading, which is the main sign of the presence of a major player. Many traders use strategies to trade on level breakouts. Such setups will show really important levels. When testing levels, you can see signs of false breakouts when instead of a strong breakout, only the tail remains above or below the level. These quick signals tell you that the first breakout test was unsuccessful. If a breakout does occur, text prompts will let you know if there was an engulfment and another false breakout. These levels can form ranges where the price gets stuck and forms a flat. And breakouts from such levels can reverse the current trend. Another interesting indicator is the flat finder. It monitors the moments when the price shows signs of forming a range in which a new flat can form. The indicator draws a red and a green line and can narrow the range when there are such signs. The arrows you see are a combination with another cluster analysis indicator that we will discuss in the next videos. When you see a flat pattern emerging, you should realize that trend patterns can carry increased risk. However, if the market is in a strong, stable trend, as in the example on the right, you should wait for a new flat to emerge in the direction of your trend. From the previous video, you already know that some corrections are formed in the form of flats, so if you see an uptrend in the background, the green line can be a place to enter the trend direction, as well as a retest of consolidation after an upward move. This is what an upward trend reversal looks like when at point 1 we move down from consolidation, after which a new flat is formed below, and at point 2 we have an upward exit. Such an exit can lead to either a deep correction or a complete trend reversal. Using additional indicators and robots, such as the ones we discussed in the video on order setups, exits from consolidation will be a trigger to start looking for entry points in the direction of the breakout. This is the end of the video. In the next video, we will talk about analyzing balance sheets using the volume profile. For me, this is the main tool for analyzing the market and setting priorities for trading. Please support this video by reposting and liking it, write any comment, you know that it helps YouTube to promote this video. See you in the next video.